You're welcome. The 100 days in finance, not too much energy, too much energy, too much energy. I hope you've been good. I hope you've been good. I hope everybody's okay where you are.
Yes, greetings to everybody. Thanks so much for inviting me again for this stuff.
Yeah. I think before we even go deep into the question, how important is it as an investor to know how to read books of accounts and the financial reports that come with it? Yeah.
Okay. I mean, as an individual, first of all, right? I wouldn't say just as an investor, but as an individual yourself, there is a very important aspect of understanding financial literacy and be fluent in finance. Some of us, we didn't grow in a house where they were teaching us how to use money. You know, and we made mistakes on how to use money. You get yourself to a place where you're making really enough money, but you end of the month you don't see. It's like money ends before you even see it in your own hands. And I'm pretty sure people here that are following us will relate to this. There's moments where your salary finishes in your mind. You don't even see it anymore. Like as soon as it gets to your account, it's already gone, right? And there's moments where I mean, it's very common. Like we all face these issues, like where you really know you are making money with your work, but when you look at your balance sheet, it shows that you were supposed to have money, but when you look at your bank account, it's zero, right?
Yeah.
So this is a very, very common thing that everybody have experienced, and many people, especially young people, have been experiencing. That's what I'm saying. It's not just about you being an investor to understand how important it is to learn or to be fluent in literacy, in financial literacy. It is for everyone as a human being, and understanding personal finance, understanding how money works, how the economy works, how things around you, how debt works. No, it's very, very, very important. At least the basics are very, very crucial.
Okay. So now when you look at that, how do you get to know red flags and golden opportunity through looking at different balance sheets?
I mean, in terms of red flags, like when it comes to financial fluency, red flags, I mean, someone who doesn't have a good understanding of finance, first of all, you will find that person is always into debts, right? Like you're always into debts. Your debt level, your debt rate is always rising because you don't understand how money works. Your margins, like if you are in business, for example, you find out that you are selling a lot, but you're not making profit because your margins are not matching your returns, right? Or your revenue. So this is just crazy. I mean, then you have that inconsistency in earnings because if you don't understand how financial market works or how money works or how the economy works or how to use money in your daily life, whether you are a businessman, investor, or just a father in the house or a mother in the house that has to take care of the family and use the provision funds properly, you'll find out that the returns on your investment or the consistency on your earnings and your returns are never going to be there. You're never going to be consistent because something is missing on how you managing funds, and there's a negative cash flow all the time. In business, we always say cash is king. Why? Because cash is great when it comes to operational work, but you find out that many companies prefer to have money in the paper, but they don't have money in a cash form. It's lack of financial literacy. You can never be an investor or an entrepreneur and you rely on money in the bank, or you rely on money in a paper form, or you rely on the money that is showing in your balance sheet. You have to have cash. That's how you know a company who is liquid, is because they have positive cash flow. Right? So positive cash flow, it's very important. Never go for negative. Never go for negative. Yeah. So those are the red flags that you will probably see in somebody's life as well, for you to know that these people have zero understanding of financial literacy. Those are the few things, it's just very important to notice those things earlier for you to fight them.
And some of the okay, if now looking at healthy good cash flow, healthy cash flow, and bad, how do you separate knowing real profit, a company is actually making real profit, and there are either a company is making real profit, or there's some accounting illusions going on in a company's financial report, especially if is willing to invest in your ventures.
So your line is breaking. I wasn't able to hear you. Your line is breaking. I wasn't able to hear you.
I'm saying, how do you identify real profit? Can you hear me?
Yeah, I can hear you now.
Hello? I'm saying, how do you identify real profit as opposed to an accounting illusion in a company's financial statements? Yeah. Okay,
so remember, there's one thing in business when it comes to financial accounting, which we always never forget, is that from your balance sheet, from your financial statements, you need to make sure that you record every single sale, from the sales made, sales about to be made, sales that were promised that are going to be done at a specific time. I mean, you kind of record everything, right? You record everything, even sales that you have not received yet. You have to record them because they're all part of your revenue. Okay. So when you're showing from the paper perspective, from the database perspective, you need to show all that. Okay. But then the real thing that will tell us, or tell investors, or tell the business executives that the company is making money, it's making profit, it's not what is in there. It's not what is in that balance sheet. Okay. Because yes, it's true that the balance sheet will show the position of the company financially, right? It shows the overall financial positioning of the company, but it doesn't really say if the company is profitable or not in the real life. So now, the thing that shows that the company is profitable in real life is how much cash flow, how much positive cash flow you get to keep. Okay, so the higher your positive cash flow, the higher your cash flow is positive, the better your company is doing. Because a company with a negative cash flow, you're not making money, no matter what the sheets are saying. I mean, nobody cares. how much money do you have to keep? How much money can you right now, if you need to liquid something, how much money do you have that will be able to do that? It's your capacity to liquidate your debts, your expenses, your operational cost, that says that you have money as a company, you are making money or not. No matter how much, like this is why we always say this from a investor's mindset. In business, we say that your revenue does not necessarily say that the company is making money, because you might make 5 million a month, but only making 100,000 a month. You get what I'm saying? So you as a company, you can make a revenue of 5 million, you know, but only making a profit of 100,000.
Like,
so it's possible.
Yeah. It is. Hey, how does that happen exactly? Like,
Yeah, it happens
let's say
based on
you have 5 million.
Yeah, I mean, it is based on how much money do you spend to keep the company running. Okay, how much do you spend to keep the company running?
Yeah.
Dictates how much you're gonna keep. Because you may have a company who is making 5 million rand or $5 million, you know, in revenue, but because of your debts, your equity that you have to pay, your operational expenses, you know, your taxes, everything. When you look at all that, it takes up to 80% of your revenue. You know, you're paying salaries, paying salaries of your staff. Putting all those kind of things can take up to 80% of your revenue, and then you end up going home with only 20%. So that is that. What is that? You understand? So this is why having a good understanding of financial literacy, of how to manage funds, how to manage finance, it's crucial for business growth. I always say there's two major departments in a company that you can never compromise. It is your financial department and your HR department. Never compromise in these two departments, because your HR department will work on ensuring that operations are properly executed by the team. It deals with the people. And your financial department deals with the money, how the money is used, how the money is allocated. Where should we put the money in? Should we buy a new business, or should we keep the money in the bank, or should we, I don't know, sell the company? Should we invest in this project? Is it worth it to, you know, your two departments in a company, the HR department and your financial department, are crucial for the business to run properly. I'm not saying other departments are not good, are not important. What I'm saying is these two are major departments to be run very, very, very well. So, and yeah, I mean, every investor, you know, want to understand those aspects of your company for them to know if they're actually going to get return of their own investment the way they actually want it to be. So yeah, as an entrepreneur, we have to be very careful about those aspects.
And you said you've really been talking about cash flow. I think people should understand the importance of creating cash flow to assess the health of a company, especially from like investors standpoint. How do you assess cash flow? How do you interpret cash flow to assess the health of a company?
Just read the question again.
I'm saying, how do you interpret cash flow to assess, especially now, defining cash flow first, and then interpreting it so that you can assess, you know, like the health of a company. Yeah.
I mean, Yeah, that's what I said in the beginning. A company is only healthy as its capacity to liquidate its assets. That's it. Okay. So a company, I will repeat that, a company is healthy, is only healthy when it has the capacity to liquidate. Okay. So if you are not able to liquidate, then you're not healthy.
Yeah.
Okay. Positive cash flow means you're always high, it always growing positively. That's what positive cash flow means. So, and when you have enough cash flow, when you have money circulating in and out, and it's always positive, that's when you know the company is healthy. That's when you know the company is actually making money. That's when you know that the company is actually able to liquidate. Because if the company gets to a point where the cash flow is negative, no matter what the paper say, you are not in the capacity to pay for your debts, in the capacity to pay for anything. So that means you are unhealthy. You need help as a company. And in that position, no investor will come in and invest unless you get a private equity that wants to buy the company and help you liquidate the company or liquidate the assets so that you can pay for your debts, and then they start everything from ground up, you know. So that's what happened. So the healthy the health of a company is only known from its ability to liquidate its asset, you know, and be able to pay for its liquidate its debts, like pay for its debts, and without having any problem. That's all.
Oh. And in line that also goes in line to the next question. The finding now the competitive disadvantage a company has through like the financial reports. You see, basically, business is competition. Like you're competing to see the who is better at providing what. So from an investor standpoint, if you're looking at the financial statements of a company, how do you know that it has a competitive disadvantage in the market?
I mean, it's true that, you know, markets changes all the time, right? And as an investor, you're always looking to be involved in a company or in a project that shows growth, financial growth, and ability to live or to strive in a environment that is ever changing, you know. So now the first thing that you can look into to identify a competitive advantage in a company, it's firstly it's margins, you know, how much money you're making over time. And second, you look into, you know, its brand. How strong is your brand? How, you know, your network is around your company, right? Then you have your price power, for example, price purchasing power. So, you know, people really look for your product. People really want to get your product. You know, you have the ability to buy and you have the ability to sell. The market goes around you. I mean, you have that capacity to manipulate your own market to get things done. And then the lastly is your return on equity. So return on equity means that how consistent it is you're paying back equity to your stakeholders, your shareholders, right? Yeah. So that is something. Those are the very important points that you look into, or when if you want to identify a competitive advantage in a specific project or in a company. And these are things that always attract investor. You know, if investor says that your margins are high, your brand is strong, your purchasing power or price power is powerful, it's great, you know, it's stable, and you have consistency in paying your shareholders. Yeah, those are the things that you look. You know, so businesses as entrepreneurs need to strive to maintain these 4 points very, very, very well as they run their businesses, if they are looking to attract investors to bite in their cake.
I think that's I think that's all the time that we have right now to talk about the financial fluency. I think this topic specifically needs a bigger. There's so much to unravel through in this topic, especially from financial fluency, since majority of people don't even know about books, like keeping books, how important it is to keep books, how important it is to be able to interpret the books themselves. And I think we'll definitely get another session where we talk about this at length, because it's a lot to unpack. Thank you so much, Lusimadio, for your time. Guys, Lusimadio, I'll definitely leave a link for how you get him through LinkedIn, through Facebook, through Instagram, and definitely. He's an investor. He's a young investor. He's on the Youth Advisory Council of Africa. He'll tell you guys more about that. Yeah. But thank you so much, Lusimadio, for your time. And anything else to tell them before we go about financial fluency?
Well, I would say the same principle that is applied on personal finance are the same principles that apply on a financial management for a company or for a project. The principles that a mother applies to manage finance for her home are the same principles that we apply when it comes to business or investment. It is just that one looks a bit informal and without an order, but as we are applying it with more standards, bit much formalized, you know, we follow some type of route. But it's exactly the same thing. So if you just take that idea that you as a person, how you manage your own finance, your own money, your own salary, bring that same concept to the business. It's the same idea, but you just expanding, because on a business you have other aspects that you are bringing all together. You know, now you have this sheets here, we have these statements, that statement. You're just trying to break things down, but it's not really anything complicated or different. It's the same exact principle that is applied in personal finance. So let's learn more about finance. It's very.
Thank you so much, guys. As you can see, there's so much to unpack. There's actually so much to unpack that we will get more time, and I'm betting Lusimadio, you definitely have time to talk to them more about managing their finances, especially their business, when an investor comes in to actually see. So guys, thank you so much. I think we'll end this this episode with everything that you manage. Like Lusimadio said, the way you manage your finances at home can also be translated to how you manage your finances in business. So, with that being said, I don't think there's anything we'll add from there. So, watch out for episode 4. Episode 4 now is risk as a strategy, and how to diversify your investments beyond stocks and bonds. And Lusimadio, see you again tomorrow.
Thank you.
All right.